So again, the impossible loan for this week is, buying a home when most of your income is per diem income. So I'm going to look at my notes as I talk to you as well. And just so that way I keep on track. And so the type of loan, VA loan, obviously, that's why you're here and, being a VA loan expert. The veteran prior service. So the veteran had prior service. Cool thing is he was an actual in the medical field, got out, transferred into the civilian sector, became a travel nurse, right? Now, when I say travel nurse, I say that in air quotes because of the program that he was on. He wasn't actually a nurse like an RN. He was actually a physical therapist and radiologist. So he had two career fields that he covered down on that he was getting paid for. The gentleman was extremely intelligent the way that he negotiated his contract and his salary. So to work in the travel nurse program, he negotiated to where he wanted a small base salary of about $48,000 a year. However, he wanted to be paid similar to the way that he was paid in the military. So he got a stipend for housing. He got a stipend for his car. He got per diem. And all that added up was about almost $185,000 consistently year over year. Now, remember, the VA doesn't care what the type of income is as long as it's consistent and likely to continue. Now, most lenders shied away from this because they forget the essence of the VA loan and they forget who it is that they serve. So if you think about it, our active duty folks have a small base salary, but they also receive BAH. They also receive subsistence for food, right? Not for the entire family, but for themselves. And then depending on their location, they get a locality pay of either OCONUS or CONUS locality as well, right? And that's something you can document through military orders, stuff of that nature as well. So in the civilian sector, it's really no different. We have a contract stating exactly what his base salary was, what he was entitled to for per diem, his location that he was going to be working. So he literally was going to be in the Houston, Texas area. He had a 3-year contract and he was going to be covering down on 7 different hospitals in the greater Houston area, right? All within about a 75-mile radius. So for commute purposes, that actually isn't too bad. We know people that buy homes in Virginia that work in the DC Beltway that'll commute, an hour and a half to 2 hours one way just to get to work, right? So the 75-mile radius was really, that was a non-issue. Now, some of you are saying, well, Jay, then how do you prove that's stable and likely to continue? Well, he'd been working for this company for 5 years prior in different locations around the country and around the world, and his salary and his per diem was consistent. Every year, everything was the same. So even if you took a worst case scenario, as far as a 24-month average and went the lower amount, he's still more than qualified, met residual. So he met all the key income blocks required per the VA guidelines. And that's really what we had to do is we had to just, connect the dots, paint the picture, and then submit it to underwriting. Now, again, you guys will hear me say this before you just especially when you have a niche situation like this, it's not smart to just go with your gun and say, yep, we're going to do a pre-approval, you're good to go. You really should take the time. If you have a head of underwriting, especially government underwriting, that you have a relationship with, have that conversation with them and say, hey, here's the situation. No other lender can help them. The person's very well qualified, great FICO, great compensating factors, money in the bank, assets, consistently been doing the same thing now, going on, 5 years, getting ready, has a brand new 3-year contract. Here's all the positives, right? And then you just got to, put the breadcrumbs together so that they can follow the trail. We did that, and we do that. Anytime that we have a niche product or a niche situation, I shouldn't say product, but a niche situation, that's what I do. That is our standard SOP, right? So of course, when we went to head of underwriting, went and talked to Andre, said, hey, here, this is what we got. He's like, hey, you know what? Let me pull in the underwriter that I would assign to this file and get her feedback as well. He goes, I like it. I just want to make sure she understands your train of thought. And so we had about a half-hour meeting, explained everything, showed all the documents. And at the end, they're like, yeah, this is a solid file. Let's do this. We'll issue the conditional pre-approval right now so that way they can go out and shop, right? And that way, once they actually find the home and go into contract, we're good to go. So again, we did all the prep work up front, right? And what I'm trying to get you guys to think here is you know, conventional loans are easy, right? They're simple for the most part. Jumbo loans, maybe not so much, right? Because typically the type of buyer that you have that's buying a jumbo loan is a little bit different. But VA loans are actually the easiest loan, I think, to do, especially if you just structure the loan properly. And you got to do a lot of work up front, right? Got to set the proper expectation management. And if you do that, you're going to be a success rate of at least 99% or better. I would say 100%, but we have to factor in that 1% for when the buyer just does something stupid that you can't control, right? So headed up to underwriting. They agreed. We submitted in for the conditional pre-approval or fast track program. Boom, buyer was ready to go. Buyer found a home, was within the parameters of the pre-approval, went into escrow. We closed it 23 days later. And the only reason it was 23 days is because it literally took 16 days to get the VA appraisal back as opposed to the standard 10 days, right? But again, it all came down to setting the conditions, right? I have multiple combat tours, combat focused. And one of the things that we always planned about is, you can make the perfect plan, but once you execute, you still have to set the conditions, right? If you have an objective and you weren't counting, on a 240 machine gun nest to be in your way as you're, maneuvering forward, you don't just go straight through, say, hey, I'm just going to go ahead and attack that 240 position head on. No, you got to say, okay, let's set the conditions. Let's call on some indirect fire. Let's prep the objective. Let's get a flanking element to flank one way or the other as we suppress and keep their heads down while the flanking element comes through. And it's the same thing when building VA loans, right? You just have to set the conditions, right? Set the conditions, set the stage, then execute. So honestly, this was not a difficult loan, but it blew my mind as to how many lenders would not count the per diem income, when really it's no different than the non-taxable income that an active duty military buyer receives while they're serving, right? So when you can put things together like that, that's how you're going to win. So short video this week. If you guys got a comment about this, or if you got another, hey man, I need some help. We've got this loan. I just don't know if we can do it. Reach out to me. I'd love to help you out, because the ultimate goal here is helping a veteran own a piece of what they've helped defend, right? Anybody can do the vanilla, plain Jane, Cracker Jack loans. Those are simple, right? We make our money, we earn our title by truly understanding what the VA guidelines allow us to do. And you just got to push that envelope, right? You got your box, you got your parameters. You just got to know what you can and can't do, and then execute, right? Set the conditions. Hopefully this was a great video for you. Again, if you have any conditions or scenarios that you'd like my expertise on, drop a comment down below. Remember to like, subscribe, and share, and we'll see you again on the next